Welcome to the Real P&L Trading Show. Every week, I share my real accounts, each one tied to a specific trading system so you can see exactly how each strategy performs in real time. I also share my safe wheel strategy here for free. Let me know, guys, that the tech is working okay in the comments, if you would. Good morning, Kevin. Good morning, Tom. Let me know in the comments that you can hear me, you can see me, everything's working. I would appreciate that. I'm going to move forward here. Also, be sure to post any questions you might have. A lot of times I get to the end of the broadcast. You guys ask a question and I can't really get to it because I'm ending the broadcast. So ask those earlier rather than later because we are on a little bit of a delay. All right, let's start with the earnings edge. I still don't see any feedback, so hopefully you can see me. Seems fine. Good. Thank you, Tom. All right. How you doing, Tommy? Okay, let's take a look here at what is going on. Okay, you can see here I'm talking about the earnings edge. Last week on the earnings edge, I did not place a trade, and that's because there were no stocks that fit through the filter. And we are coming into the end of earnings. We're going to start earnings, a new cycle of earnings coming up. And I would be extremely surprised if I did not place a trade this week. So I'm 99% sure I'm going to place a trade this week because we are coming into earnings now. So there's going to be a lot of stocks available and probably multiple stocks will fit through the filter. So I look forward to putting on a trade this week sometime. And of course, there's always that possibility that I won't, but I'm 99% sure that I will. But I did not put on a trade last time. So on the earnings edge, well, let's look at the account, what my net lick is. Let's make sure I'm in the right account here. And you can see my net lick, 21,836. Okay, so 21,836. And you can see this year started with $6,053. I'm up $15,783, and I've turned $6,053 into $21,836, up 260%. So doing very well this year. This is the new 3.0 earnings edge. It's different than the older earnings edge. It's obviously performing much better with that change that I made there. Now you can see the earnings edge in 2022, how it made 63%. The market was down 20. In 2023, the earnings edge at 17%. The market was up 24. In 2024, the earnings edge was down 36%. The market was up 23. And of course, in 2025, I'm up 260%. Let's see what the current price of SPY is. 664.47. 664.47, which means it's up 13.49. So the S&P is going up really higher than, it's having a better than average year of 13.5% in 2025. And if you look at overall, since I started trading this system in 2022, it's up 336%. The market's up 39.9% since 2022. And on a risk adjusted basis, I'll cut that down significantly. This is just a ballpark approximation. Say the earnings edge is up about 134% versus the S&P around 40%. Just on a risk adjusted basis. So this trade, the earnings edge, is more risky than holding the S&P for sure. Okay. All right, let's talk about the PL5 Pro. That's where I have most of my liquid net worth. And that's in the PL5 Pro. So the first thing I'm going to do is look at the account. Let's go find it here. Should be this one. Okay, 427,604. 427,604. I think I'm down a little bit from last week. 427, yeah, down a little bit. 427,604. And you can see that I started trading the PL5 Pro live July 19th, 2024. So that last 6 months of 2024, I was up close to 16%. The market was only up 6.65. That's actually pretty good for the market. It's a little bit above average. And then this year, I'm down minus 8.73. This is the first year that I've underperformed like this. It's the first year so far that I've been down We'll see what happens by the end of the year. But if I hit the end of the year and I'm down, it will be the first year that I'm actually down using this PL5 type trade structure. I think I'm going to be able to be up by the end of the year. We're going to find out. And then you can see, of course, this year the S&P is up 13.949, so I'm, underperforming pretty good here. But on a risk-adjusted basis, this number right here, yeah. So you've got the combination of those. So I'm basically up around 6% since I started, which was about a year ago, and the market's up 21%. So I'm underperforming, but on a risk-adjusted basis, I take about half the risk of owning the S&P with this system. So I'm, on a risk-adjusted basis, approximately, I'm up about 11.73. The market's up 21. So still underperforming, and I look forward to sharing the results on the PL5 Pro from here into the future. We're going to see. I'm very optimistic about what we'll be able to do. All right, now we have the PL5. This one is the goal is to outperform the S&P, and this system here is tied to the S&P, and so the volatility is actually probably a little bit more than the S&P. We're about the same, but a little bit more. And I can't share my entire screen because I trade this with Interactive Brokers. So I'm just going to show a little bit of my screen there. Otherwise, I'll show my account number, which I don't want to do. So 34,566. Just 34,566. So from last week, down maybe $30. And you can see I started this in the middle of last year too, and I started showing the reports on this PL5. And during the last 6 months of 2024, I was up 10.2%. The market was up 3.94% from July 16th, 2024. In 2025, I'm up 4.5%. The market, of course, up 13.5%. So overall, since I started trading the system live in front of you and giving you the results in the net liquid every week, I'm up 15.2%. The market's up 17.96%. And on a risk-adjusted basis, you can see I'm just barely underperforming the S&P so far in since I started this system about a year ago. All right, let's talk about the safe wheel now. First, I'm going to talk about the results or the net lick. Let's see, the safe wheel is this account here. What's the net lick? Oops. 57.52 is the net lick. 57.52. So I'll put that in here. 57.52. So it's down from last week, about $80. 57.52. And you can see how the safe wheel's done since 2022. It did 21%. The market was down 20%. And then 2023, it underperformed. It did 5.39. The market was up 24. And then in 2024, so kind of similar to the earnings edge, it had a bad year, down 14.5. The market was up 23. And so far this year, it's up about 5%. The market's up 13.5. So overall, since 2022, up 15%. The market's up 39. On a risk-adjusted basis, it's probably get about half the drawdowns as the S&P, up about 30% overall. The market's up 39. So still underperforming just a little bit. And I think the key to this system is the safe wheel is so you can learn. This is a great way to learn how to trade. And I think the wheel strategy is a very popular strategy. So if you understand the wheel strategy, then you can understand the safe wheel. And then once you start understanding the safe wheel, you can kind of understand how to trade what I call a level 5 trading system, which is a premium selling system that is hedged, because I would not trade a premium selling system that was not hedged, because I don't want to have 40, 50, 60% drawdowns in my portfolio on a net liquidation basis. Okay, so you see what's going on here. Now it is actually time to trade the account. So let's take a look here. What is going on? So first question, do I own any shares? No, I don't own any shares, so I'm not going to look to write a covered call. I'm probably going to look to sell a put, open up a new wheel position. But the other thing I want to do is make sure that my hedges are in place and that they're proper. So I do have this long call. I did pay 13 cents for it, which is super high. So we're probably coming into earnings here because I couldn't find anything to buy for 5 cents. So I did kind of overpay a little bit here, but we're coming into earnings and there were no strikes available that were worth 5 cents. So I had to go to 13 cents. So I bought the 48 call, which is way far out of the money. We're at 34.50 ish, which is fine. Okay, so I have my long call in place now, my put. So I have 3 questions. Number one, do I own 200 shares of the stock? Because if I do, I want to see if this is paid off, and the answer is no. Then how many days are left in this trade? Is it under 100? Because if it is, it's depreciating too fast, and the answer is no. So I don't do anything yet. Then next question, is this $24 put close enough to the money within 70%? That I don't know. And I'm going to find out. So 24 divided by what? 34.54. 0.6948. So based on this, I need to roll this 24 put up to probably 25. We want to be within 80%. So let's go with, whoops, let me take that back. I'm going to have to clear that out. So we want to be, say, 34.58 times 80%. Where I want my strike to be. I want my strike to be around 28. So I'm going to move it up to 28. So I'm going to roll this up right here, this February 26th, 24 put to the 28 put, because I want it. It's not within 70%. And if I'm going to move it, I'm going to move it to 80%. So I'm going to right click here and click create rolling order. And I'm going to make sure I'm in the same expiration. And I'm going to buy the 28. So I'm going to spend some money here. 126 bucks. Okay, let's make sure this is February 20th. 109 bucks. So I'm going to exchange this. I'm going to roll. I'm going to exchange this 24 put because it's too far away out of the money for the 28 put. And boy, I'm just barely 69%. So if you were in my position and you decided not to roll, I would be totally okay with that. I mean, I'm just barely not 70%. But I'm going to go by the rules very strict rules, and I'm going to go ahead and roll this. This may be a little bit inflated coming into earnings, but it's pretty far out of the money, so it's probably not really that affected by this earnings cycle. Okay, let me make sure I'm going to do this right. So I'm going to get rid of this, the February 26, 24 put, February 20th, 2026, 24 put. I'm going to sell it because I own 3, and then I'm going to buy the exact same expiration, but I'm going to buy the 28, and maybe I can pay $1.02. And let's see if we can get this filled. Okay, so good. I got it filled at $1.02. So now my put hedge is a lot closer to the money, and it protects me a lot better. And we'll see what happens with Intel. Looks like they're probably coming into earnings. One way I can see if they're coming into earnings is just kind of look at the prices of the options here. Yeah, so I'm going to go ahead now and sell a put. So I'm going to get some pretty good premium. I want to get at least around 35 cents. So I can sell a put here for 33, 32 cents. That's not quite enough. So I could sell it here at 45 and get enough. And then what I like to do is as long as I'm out of the money, I'll just go one more back. So I'm going to sell the 33.50 put. And I'm going to do one of those because of my sizing. I'm between $5,000 and $10,000. So I'll sell one contract and I'll do 3 put hedges. So around 62. Looks like I can collect about 62 bucks going to the 33.50 put, selling it. Okay, so that filled. So now I have I'm always collecting ABC. Always collecting Uh, every week I'm collecting premium. That's what the Safe Wheel is all about. You can always collect premium every week. Okay, so I rolled up my put hedge and I sold my put, opened up a new position there, and now we'll see what happens. We'll see if I get assigned, or we'll see if Intel, maybe it shoots up high, and we'll see what happens with that. But everything's set. I'll come in and look at it actually on Friday. I'm going to come in and buy a long call, and then we'll see on Monday what happened. So that is the Safe Wheel. Let's see if there's any questions about that. And also I'll take a look at some of the questions and comments. Kevin, good morning. Tom, good morning. I appreciate you letting me know that everything's working on the tech. Tommy, how you doing? Cajun Tigers. Looks like TSM this week. Okay, so you're talking about the earnings edge? Yeah, we'll see how that goes. TSM might be a play. Question from Cajun Tigers. Should we ever put multiple trades on for the earnings edge or just one? I personally just put on one because I just like to keep my life simple. But most people that are into the program and understand it, they like to put on more than one position because it's better diversification. And question here, Matthew asked, why do you use Interactive Brokers for one system and TOS for the other? Because when I'm trading futures or options on futures, Thinkorswim charges like $2.50 or $3. I mean, a crazy amount of money, $2.50 per contract. And Interactive Brokers is like around 85 cents or $1. You know, it's much, much lower. It's like 1/3 almost the cost. And those commissions were starting to eat into my profits because I'm only trading around a $30,000 account. If I was trading, $100,000 or $200,000 or $300,000 account, it wouldn't be such a big deal. But yeah, that's why I use Interactive Brokers. I don't like Interactive Brokers that well, not nearly as much as I like Thinkorswim, but it's still good enough to use in order to save on commissions. Thor has a question. Is the PL5 version you're running the S&P 500 variant? Yes, it is. So the PL5 version that I'm running in my Interactive Brokers account that started with $30,000 and now it's up to $34,000. That is the S&P 500 variant. Yes. Brandon asks, do you trade any calendars? The earnings edge has a calendar aspect to it, but it's not exactly a calendar. So yes and no. I know that's not a very black and white answer, which I like to always give, but that's what it is. Will says the wheel has been great this month. Yeah, Intel's been good to me. And I think it was because we had that long call and Intel just shot up 30% in one day, and we were holding this little call for $5 and I sold it for like 400. So, the Safe Wheel has a lot of ways that it can profit and a lot of ways that it can make money. And that's one of them. Tom says, since we're rolling the 3 puts in any case, why not roll out to the next month at the same time? Well, I could roll out to the next month. Let's see. Right now, I have a position that has 144 days. So I like to do, close to 150 days is kind of my goal. And 144 is good enough. But the main reason why I rolled was to move my strike price closer to the money. It wasn't to worry about how many days I have until expiration. It was getting that strike price closer to the money. It's got to be close enough to the money to protect the position. And if it's not within 70%, based on back tests and forward tests and everything, it's not really close enough to protect you. So that was the main reason why the roll happened. Obviously, I could have went out further, but I'd like to go as close to 150 as I can. So Brandon asked if I traded any calendars, and now he's asking if I trade any butterflies. Yes, the PL5 and the PL5 Pro is a version of a broken wing butterfly. So yes, that's where I trade the majority of my liquid net worth into a butterfly type trade system. Tom asks, would we sell the in the money put if the extrinsic premium was greater than the out of the money? Uh, no. If you sell an in the money put, that means it kind of gives you a really high probability that you're going to get assigned. And I don't, that's not the way the traditional wheel is uh, traded. And I wanted to trade the traditional wheel with a hedge system. And so I sell out of the money puts. And a lot of times, like last week, I don't get assigned. Just like last week, I didn't get assigned. If I did an in the money, I would have gotten signed. I would be holding the shares at this moment, trying to sell a covered call. And I'd prefer to. It's nice to just sell puts, sell puts, sell puts, sell puts, and just collect premium and not have to worry about anything else. But yeah, no, I would not sell an in the money put. You can, and you'd have to back test that system and see how it works. Kasva Saba says, why would you not roll the 20th of February put into March? So again, same question, right? Why didn't I roll out, not just up? And really the answer is because I'm fine staying as close to 150 DTE as possible. And maybe the other expiration cycle is closer to 150 DTE, but I'm just kind of focused in on, I want to roll closer to the money. I don't really care too much about changing the cycle that I'm in. It's a good cycle. It's 144 days till expiration. I got another 40 days, 44 days before I got to do anything with it. I'm totally fine with that. So it's just kind of easier. I mean, really, it doesn't matter too much. You could have rolled out if you wanted to. And I could have rolled out. That would have been fine. But I want to make things as simple and repeatable as possible. So that's probably the main reason. Brandon says, any trade ideas on the government shutdown this week? No, I continue to trade my systems regardless of the market environment, and they are quantitative. They are black and white. They have systems to tell you exactly what to do and when. And if there's a government shutdown, I don't take that into consideration. I consider that more of a fundamental thought process, and I don't make decisions based on fundamentals or based on a story. I don't make decisions based on a chart. I make decisions based on statistical analysis and backtest results and forward tests and just statistics. So no, I don't take that into consideration at all in any of my trade systems. Any other questions? Let's see. Let's go down the line here. Okay, great. Good questions today. This was an interesting situation where I rolled up the put hedge, which is kind of different. Actually, I did this a couple weeks ago. So I've rolled up the put hedge twice in the last few weeks, and I think I've probably only done this 4 times since I started trading the system. So it's pretty rare, but it's happened twice in a row with Intel. Intel's been going up, much further than anticipated, which is fine. That's what happens when you're in any kind of strategy. The unexpected happens. That's what you have to plan for, and this system plans for that. All right, I appreciate you guys. I'm going to go ahead and sign off. And one thing I always like to say as I sign off, if the P&L is not real, what else are they trying to conceal? I'll be back next week, and I appreciate you guys.